So in this video, I want to talk about a trade that I had taken in BSE. I took that trade on the weekly time frame chart. I had taken this trade in April, 23rd of April. So it was a risky trade, but I want to discuss this trade. So just to give you an idea of what I am looking for when I am taking a trade. And by the way, any video of mine is educational for educational purpose only. Do not consider this for any buy sell recommendations and things like that. Okay, so I had taken this in April, 23rd April, somewhere in this area. I had taken some notes. I will show you. So you see this at that time, the market was in a confirmed uptrend. The industry strength, the name of the stock is BSE. The industry strength was improving. It was ranked third in its own industry group. Just a second. Yeah. Margin was not at an all time high. The margin was improving. And if I do the liquidity comparative, technical, fundamental, and market analysis, it was satisfying all of my criteria. And I have written some notes here. The time frame was weekly when I took the trade. I took a 10% position size, bought in the blue shaded area. Then the company declared bonus. Two times I sold one third. So this way I keep notes and sold everything on 10th of July. So bought the stock on 22nd or 23rd April and then held it till 10th of July. Okay. Let's have a look at that trade. So if I mark the high of this, which is 2044.45. So let's draw the rectangle. So this is 2044.45 and this will be 5% above that. So I will take out my calculator. So this is 2146.67. Let's say 2146. Okay. So here I bought it in this particular week when it entered that blue shaded area. And let's mark the green zone as well. So 2044.45 multiplied by 1.20, that's 2453. So this is 2453 and this is 2044.45 multiplied by 1.25. That's 2555. And let me give it green color. So somewhere here, okay, here, and here. That was the time I was holding on to the stock. I remember I had bought the stock in this week, 23rd April, held on to it for 1, 2, 3 weeks. I sold one third here, and here I sold another one third. During this time, the company declared bonus. If I remember correctly, it was 1:2. So for every one share that I had, I got two shares. Right. And those shares I held, I think, till July. So this was the time. So 10th of July. So I was waiting for a break of the uh, 10 period, 10-week simple moving average. So I have written my notes here. Sold all on 10th of July. So see, this week is 7th of July. So 7, 8, 9, 10. So when the price entered the green zone, I ended up selling the stock because it was trading below the 10-week simple moving average. So you see about 10% here, sold one third here, sold another one third here, got the bonus shares, held on to the stock for quite a few weeks. As it started moving below the 10-week simple moving average in the green zone itself, I sold the remaining one third. So all of my shares were sold within that green zone, all the 10% position size. So I ended up making a return of 20 to 25%, between 20 to 25% return, because I sold in that green color zone. That is how I bought the stock on the weekly time frame chart. The question is, why did I buy the stock? For that, I have taken screenshot at that time. You remember this orange trading system? So I do liquidity analysis, comparative analysis, technical, market, and fundamental analysis, right? So for that, I have taken this screenshot. Yeah, have a look at this. See, at that time, it looked like this. After I took the trade, I took the screenshot. Have a look at this. Price strength is 95, fantastic. Accumulation distribution rating is A, fantastic. Group rank is 47, no problem. We saw that the industry group rank is improving. Okay, have a look at these numbers, consolidated numbers. Triple digit quarterly earnings growth, 95% sales growth, right? Return on equity is 24%, EPS growth rate is 60%. Earnings stability, we would have wanted it to be below 25, but this was 33 here. EPS was at an all-time high, although it was not increasing sequentially for the latest 3 years. EPS was at an all-time high. So if you see overall, liquidity-wise, the stock is not showing any problem. Millions of shares are being traded. It's not a penny stock. So liquidity-wise, it's okay. Comparatively, it's okay. So price strength is good. Accumulation distribution rating is there. It is a market leader, comes in the top three in terms of market capitalization. So liquidity is fine. Comparative is fine. Technically, it is fine. The pivot range has been marked. Okay. You see the blue dots on the blue line, the relative strength line, which means the relative strength line is near its 52-week high. So the stock has never been more stronger than this before. So technically also it is fine. Fundamentally looks fine. Triple digit growth rates here. Return on equity looks great. Annual EPS is at an all-time high. So, and market is in a confirmed uptrend. So that is why I wrote here liquidity okay, comparative okay, technical okay, fundamental okay, market okay. When all of these things are in your favor, you are comfortable taking the trade. Now, in this trade, there was a risk. If you notice, the base starts from here. So let us count the red bars. 1, 2, 3, 4, 5, 6. Out of 6, 1, 2, 3, 4. Out of 6, there are 4 red bars with high volume. That is not a good sign. That is not a good base. Remember, in the base, I had taught you that the red bars preferably should come on low volume. But then why did I take the trade? Because all of the factors that I mentioned here, all of the factors that I mentioned here are compensating for the risk that is available in the base. That is why I took 10%. I would have taken more than 10% position size in this. 10% is a decent position size. So if I take a 10% position size, keep a 5 to 8% stop loss, right? That stop loss range. Then my maximum loss on this trade would have been 0.5% to 0.8% of my portfolio. So any which ways, I would have lost less than 1% of my overall portfolio on this trade if it would not have worked for me. Okay. So it's a classic trade on a weekly time frame chart. I just ensured that it fit my orange trading system. Okay. Or at least most of the factors were in our favor. In fundamentals, if you see, the earnings stability was not in our favor. The EPS growth rate, latest 3 quarters sales growth rate, that was not in our favor. But the latest EPS growth rate and sales growth were very much in our favor, almost triple digits. So the higher those numbers, the more compensation you get for your risk. and the market condition was in a confirmed uptrend. So when everything is in your favor, I mean, why not take the trade, right? And the management was of the trade was also very simple. When it entered the green zone, I sold my one third and I moved my stop loss to break even. Then I saw that in this candle it's not really moving, so I thought, okay, let me sell another one third in the green zone. I feared it might come down. I should have ideally held on to the stock, but I wanted to take some money off the table, use that money to finance the risk on other trades. And then the remaining one third, I just held on to it till it broke the 10-week simple moving average. Let's look at this on a daily time frame chart. So let's go to BSE. So daily time frame, it looks something like this. So my trade would have been somewhere here, 21st April. Yeah. So yeah, between these 3 days, I must have taken that trade. Now have a look at this. I draw the base. This is our classic daily time frame base. So this is the buy point. Yeah. This is how the base looks like. Point 1, point 2, point 3, point 4, point 5. So here would be your buy point approximately. So I make it yellow color and that would be your buy point. And that's where the stock started to make a move. So here, 15th April was the ideal time to buy the stock, but I bought it late because I bought it on the weekly time frame chart. I don't remember why I did not buy on 15th. I don't remember that. I should have ideally bought it on the daily time frame chart. And it continues to go up from there. Okay. Let's check whether I have made any note about the base count. No, it's not showing here. Let's go to Market Smith. Let's go to Market Smith and see what was the base count when I bought the stock. I don't remember because it's an old trade. BSE. So I will go to the weekly. So this was in April, right? Yeah, this was April. So if I go here, yeah, this is stage one. So it is base one. By the way, do you notice that Market Smith has changed the layout? Now I don't have to click anywhere. As I move my cursor, you see it shows me the values and you see the green markings here. We'll expand this. You see the green markings here. If I move the cursor here, it shows stage 1, 1. I don't know what that 1 in the bracket stands for. Stage 1 in my view is base 1. So I bought a stock which was showing good liquidity, which was comparatively doing well. It was a market leader, which was showing technical strength. It was at base number 1. It was showing fundamental strength, almost triple digit growth rate in earnings and sales. And when the market was in a confirmed uptrend, and I took a controlled position size and I risked less than 1% of my total portfolio and I managed the trade properly. What more simpler trading strategy can I give you? Okay, there's nothing can be more simple than this. If all the ducks line up in a row, you take the trade with a controlled position size, you predefine your risk, manage the trade, sell one third, one third, one third. It's very simple, it's not complicated, right? So just learn how to find stocks which fit your criteria, and when you get the signal, you take the trade. It's very simple. Okay. So on this trade, if you have any questions, just let me know. Go back and study the Uh, the stock, very interesting case study. I like to discuss old stocks that I had bought. So this was in April. Now we are in September. But isn't this a good case study where you check all the factors before getting into the stock and only then you execute the trade? And by the way, before you execute the trade on the weekly, you have to ensure that on the daily, the blue, green, red moving average is aligned. The 50 is above the 150 and the 150 is above the 200. Don't forget to check that. Okay. Thank you so much.